Welcome to Trading Nation. Let's talk ETFs with Matt Maley of Miller Tabak and Mike Binger of Gradient Investments. And Matt, you put out a note to clients this morning saying there were 3 ETFs which have caught your technical eye that look like they are getting close to resistance. What are they, and what are you concerned about?
Well, it's interesting that we see the XLE, which is the energy stock ETF, that's moving up towards the 70 level. That's been tough resistance for that energy area for a couple of weeks now. And the one thing, if it can break above that level, that's going to be very positive. And especially if we can get oil to move back above $60 for the first time in a long time. And also in the XLV, which is the healthcare ETF, that's another one that's been, kind of bouncing around in a range for several months now. If it can finally break out of that to the upside, that's going to be positive. Now, it's interesting because, when we get to the end of the year, everybody wants to, they're looking at the fundamentals and what's going to happen there, but they also want to look beyond the fundamentals a little bit and see how they're going to be positioned for groups that have been lagging a little bit but are looking to break out and kind of position their portfolios that way. Because if you look at the XLK, which is also facing resistance, but the problem with that is that we see the SOX semiconductor not going up with it. The semiconductor stocks have been key leaders for the market, but especially for the tech group. And it's only been going on for a couple of weeks, or even just a week now, that this divergence has developed. But if it begins to widen out, that's going to be a big problem for it. So it would be interesting to see if the XLK can break out. It's going to be very tough for it to do that if the SOX semiconductor indices can't follow.
Well, we are watching these 3 along with you as well, especially the semiconductor stocks. Mike Binger, you got a viewpoint on these ETFs? Anyone that you're concerned about or you view maybe as a buying opportunity?
Yeah, when I look at these 3 ETFs, I really like to dig into what stocks are inside these ETFs because they're generally have big weightings and they're anchored with some of the largest companies in the S&P. When I look at the XLV, I see a couple of stocks like Johnson & Johnson, United Health, they're extended, and then there's also a lot of big pharma, which is those businesses are challenged. So I wouldn't buy the XLV here. I prefer the biotech, the IBB ETF. When I look at the XLK, that's a technology ETF. There's a lot of Microsoft and Apple there. I think those stocks are extended. I would rather buy individual names here, names that have higher growth rates like Facebook, like Google. And then finally, when I do look at the XLE, the energy sector ETF, that's anchored. Half of that ETF is Exxon, Chevron, and Schlumberger. Those are 3 pretty solid energy and oil-related companies. We're seeing a lot of stabilization of oil prices. We think that'll continue up here in the high 50s. Those 3 stocks have big dividend yields. I think you could actually add to the XLE right here now. Out of the 3 of them, I would only add to the XLE and look for individual stocks in those separate industries in the other 2 ETFs.
All right, some really good advice there. Always know what you own. Some ETFs, they'll say they're one thing, and then you dig in and you're like, why are these stocks in this ETF? They don't do this. Everybody should take a look. Some good advice there internally, and 3 names to watch. Matt Maley, Mike Binger, thank you both very much. Thank you as always, folks, for tuning in to Trading Nation.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.